This house that you guys are looking at right behind me was actually purchased by a home flipper back in March of 2021 for the price of $737,000. And then fast forward to September of 2022, just a few months ago, the most recent owner bought this house for $1.3 million. So in a span of basically a year and a half, this house sold for practically double what it did a year and a half prior. Now, you guys tell me, do you think that this person got a good deal? Because I'm sure whoever bought the house probably thinks that they did. And getting the house for $1.3 million over here these days is a bargain. That might be true. It might not be true. It really all depends on your perspective, your outlook on life and the housing market, as well as how long you plan on holding on to the home. If these people hold that property for 10, 15 years, I'm guessing they're probably going to do all right. If they think they're going to flip it again and move in the next 2 to 3 years, they're probably going to be in for a surprise. Now today I thought it would be fun to take a look at what Jason Oppenheim from the Selling Sunset show on Netflix, a lot of you probably know who he is by now. He's a successful real estate broker over in LA. They have an office in Hollywood, recently opened up one down in Orange County now. So he's a big shot in the real estate industry over in LA. And there was a piece done on him from Business Insider about what his forecasts and predictions are going to be for the 2023 housing market. So I thought it'd be fun to take a look at what he said and share some of my own thoughts and opinions on that. Now I'm going to go through this article and break it down line by line. I always have all the articles I reference in my videos linked in the description below. So if you want to follow along with what he said here, feel free to pull it up and let's get started. So the first thing he says in his interview is that when he's looking for a property, there's 3 things that he focuses on. He focuses on the land, the location, and the finishes. Now obviously you can tell based on his response to that Jason is a very smart guy and knows what to look for when buying real estate, which is ultimately very important. He goes on to say that land is the most overlooked element and that, you know, a house breaks down over time, and over the span of 20 or 30 years, it's a good chance that the land that the house is sitting on can be worth more than the house itself due to the house depreciating and being worn out and ultimately needing a full rehab or maybe even need to be completely torn down. But if you buy the house in the right location, on the right piece of land, that you'll do well for yourself in that time frame. And I strongly agree with Jason on that. But here's the thing about Jason. He sells real estate in LA and in Orange County, some of the most expensive real estate markets in the entire United States. And you have to be somewhat of a moron to buy real estate in the wrong location over there, because almost everywhere is a good location unless you're basically buying in the hood. So over the span of 20 or 30 years, it's almost impossible to make a bad investment in this area because there's a high probability that in that time frame, your house is going to be worth more than what you paid for it. But what about the majority of people that don't live in these big metropolis cities like LA and New York and Miami, all these places, guys? Like, what if you don't live in these markets? Well, what can you do? Then if you ask me, you need to get way more fundamental about things. You need to be looking at in your local market of where are all the new jobs being added? Are they building a new warehouse in the area? Is there going to be new factory jobs coming in? What's happening to your local economy? Are businesses closing left and right? You know, is the area growing? Is it gaining population or losing population? You got to be looking at things like this in your local market if you want to have any shot at all at predicting where things are going, because it is completely possible to buy a home in the wrong area and in 20 years from now the house can actually be worth less because the area is basically dying. So that can definitely happen. And this also kind of pushes against the dynamic that I've been talking about to you guys in these videos, which is that everyone is trying to get rich fast now. Everyone is piling into the major cities, you know? Everyone's moving into places like Miami and Los Angeles and New York and Chicago, these big cities where home prices are through the roof, okay? And the more people that keep doing this, then the more expensive housing is going to get in these areas. It's not going to get any cheaper. And so I understand that the possibility of opportunity and better jobs is what brings people to these places. But there's going to come a point, which I'm pretty sure that point is now, that it no longer makes sense to be looking at these hot markets because there's hot opportunities, because the affordability is just completely gone. And so you have to ask yourself this question when you're looking at possibly buying real estate in 2023. Are you looking for a get-rich-quick scheme? Are you looking for the home that's going to potentially appreciate in value the most over the years? Or are you looking at a solid place to live where you know you can afford your bills and you're going to have a stable job and can raise a family and have a nice life? Like, what are you looking for? Now, the answer is going to be different for everyone, and there's no right or wrong answer to this, but you need to really take a long, hard look at your own life and what you're expecting from your home purchase to determine, maybe I should be buying in areas that are not so hot and desirable. Maybe affordability and stability are more important to me than how much my home's going to be worth over the next 5 years. So think about these things before you do jump into a home purchase in the next couple of years. Now, the next thing he says is there's no right time to buy a home. He said that the biggest mistake that he sees from his buyers is trying to time the market. He says that right now we're in this purgatory of a real estate market where it's not really a seller's market, it's not really a buyer's market, and by the end of next year, we're going to be looking at between 5 to 6% interest rates for mortgages. And then he goes on to say, there's been a lot of uncertainty in the market over the last 6 months, mainly because we didn't know what's going to happen with inflation. But he's saying now that we have a handle on that and the recession's not going to be as bad as we all thought, then trying to time the market is going to be a bad idea. And then he goes on to say that pretty much 95% of the time when he's had a buyer that tries to time the market, they ended up wishing they would have bought right when they first started looking. Whenever I read this, then I think this guy is totally drinking the Kool-Aid, and this is the typical advice from a lot of real estate agents. It's not timing the market, it's time in the market. Now, the only truth to that, guys, is like we've said before, if you're in a property for a very long time, 10 plus years, then yes, there is a high likelihood your home will be worth more than you paid for it. But that's not the reality for most people, because most people don't buy a home and hang on to it for 10 plus years. That's just the way people operate. They buy a home and they move in about 7 years and rinse and repeat and do it all over again. So that's a recipe for getting burned. And if you look at the trend that's been happening over the last few years, people have been moving even sooner than that, hoping to get rich quick, make a quick buck by flipping the property, live there for a couple years and sell it for a huge profit and try to do it all over again. And for him to come out and say that, oh yeah, we have a handle on inflation now and the recession's not going to be as bad as we once thought it was going to be, is like a complete joke. You can tell just by him saying that he lives the fat cat rich California lifestyle and, you know, is living that Southern California bubble and has no clue of what's happening around the rest of the country, let alone the rest of the world. I'm sure everything does look pretty rosy when you're a multimillionaire and have a successful real estate brokerage and, you know, live in Southern California in your nice mansion. You know, everything's gonna be great for you, Jason. But for the average person, timing the market is very important. Just ask the people who bought within the last several months and listen to Dave Ramsey or people like yourself, and now they have negative equity in their home because the home prices have been falling across the nation, okay? So tell that to those people that timing the market's not important and see what they have to say about it, because I'm pretty sure they wouldn't agree. But if you like Jason's advice and many other agents' advice about the time in the market, then you should be looking at the time in the market of how long you've been holding physical gold and silver. And part of the reason we have this huge problem with inflation right now is because we have more US dollars printed and in circulation than ever before in our nation's history. And ever since President Nixon took us off the gold standard back in 1971, that was the beginning of the end for the US dollar in terms of its worth and its purchasing power. But if you hold your own physical gold and silver, you can be on your own gold standard. If you have a percentage of your wealth backed up with gold and silver, then it's like a safety net for you that I know I'm not going to lose this percentage of my money to inflation. And when you're buying physical gold and silver, it's also extremely important to use a reputable company. And that's where National Gold Group comes in here, because they have a perfect 5-star rating on Google. They have an A rating with the Better Business Bureau, and they also have a 5 out of 5 rating with Consumer Affairs. And I don't know about you guys, but I do research on companies before I do business with them, and you need to be certain that you're doing business with reputable companies right now, and it's no different than when it comes to buying your physical gold and silver. So get your hands on some physical metals today. Give National Gold Group a call and tell them Michael sent you at 1-888-840-5945, or just click the link in my description down below. Back to Jason's housing market predictions for 2023. The next thing he says is that low inventory won't change anytime soon. He says that low inventory has been affecting the market for the past couple of years now, and when you have low inventory plus high demand, it makes home prices remain elevated. And he also says that people who are sitting on the low interest rate loans are not going to be selling anytime soon. So pretty much this typical run-of-the-mill arguments that you've heard so far about why the housing market's not going to crash. But the thing is, guys, if we go back and look at the peak of where home inventory levels gotten nationwide in 2022, it was about 1.8 million homes for sale towards the peak. And now it's been steadily going down because a lot of sellers have been removing their listings from the market at the end of the year, like we already talked about. But what do you think is going to happen next year when all these sellers who have been removing their listings from the market put their listings back on the market, and then you start seeing more foreclosures and short sales come up because the short sales are going to be rising due to negative equity and people having lost their job, not able to pay for the mortgage. You're going to see a lot of foreclosures start coming to market because a lot of these moratoriums were in place, and now that all that's over, you're going to see foreclosures start to tick back up a little bit, as well as the fact that what about all these iBuyers and investors that are rushing to get out of this market before everything collapses? All you got to do is look at places like Phoenix and Atlanta, where these guys bought up, 30-40% of the inventory over the past couple years and listed them for sale like crazy, trying to get out. You don't think that's going to have a huge influence on home prices? You're kidding. It's going to have a major impact. And we haven't even talked about new construction yet. So when you look at all these areas where all the new inventory is going to come from in 2023, I think we can easily go back to inventory levels that we saw pre-pandemic by the middle of 2023, probably by summertime, because you think a lot of people start listing by spring, and then people get that fever, everyone starts listing the homes for sale. At the same time, all these new construction properties becoming available, you name it, and we could be seeing inventory levels far above what we saw at the peak of 2022. Now, the next thing that Jason said is that homes that have been sitting on the market for a while can be hidden gems. And that's another point that he made that I actually agree with, because a lot of people will overlook properties that have been on the market for too long because they develop this stigma that, well, if it's been sitting there for a long time, there must be something wrong with it. But in reality, usually the problems lie in just a few different areas. Usually it's either the pictures are terrible, and in this instant online dating culture where people are swiping left and right in a matter of a second after just looking at one picture, first impressions count for a lot. And when people see a listing online and it doesn't look so good after the first picture, they just swipe and move on to the next one. But that can be a hidden opportunity for people willing to look past terrible pictures. And say, for example, it's not terrible pictures, but the price is just too high. That's another reason that home listings can sit stale, especially around here in Miami. That's the #1 reason I see listings sit on the market for too long, is the price is just too high. And the other reason why homes can sit on the market these days is because a lot of buyers want turnkey homes. So when you have people that just want to pick up the keys and move in, it makes it harder to sell a property that is not in move-in condition when most buyers want properties that are in move-in condition. So that's the thing with this. And if you're willing to put in some elbow grease and actually improve a property, you might be able to get something 25% off of, you know, what they're asking because the place is in bad shape. So just because you've seen properties on the market for a long time doesn't mean it's not worth a look. And then another thing that he says is that when it comes to real estate, pessimists don't thrive in the long run. Meaning that if you have a negative outlook on the housing market, like I do and probably a lot of people who watch my channel do, then you're not going to do well and you're not going to make money. And to me, I just laugh at this, guys, because when you're careful, when you're not buying into the FOMO, and when you're not following the rest of the pack, is usually when you come out way ahead. That's been my own personal experience, and I think now's a great time to be a pessimist on the market because all you have to do is look at the data, and we're going to dive into that later this week and just show how much things are going down in different areas, guys. I mean, it is astonishing how much home prices have fallen in just basically the past 6 months. But he's basically saying that, you know, buyers who are pessimistic about the market think that they're going to wait another year or so and then get a great deal on a property. He thinks it's not going to happen because there's way too much buyer demand, and as the inflation reports come in lower, mortgage rates are going to go lower as well, back down to the 4 to 5% range, and everything's going to be beautiful. That's what Jason thinks is going to happen, guys. I mean, go read it for yourself. I am not making this up. And like I said, when you're very rich, it can definitely skew your view on the world and where things might be headed, as well as the fact that when you own a successful company and you live in a very wealthy area, you might not be as immediately affected by this recession or, you know, prices slowing down or anything like that. Just like here in Miami, guys, even though I feel pretty insulated from what's going on, I am not blind to what's happening across the world and the rest of the country. Miami is one of those cities where home prices have been holding on very strong, but I see a lot of other areas across the country where that's not happening. And unfortunately, people like Jason and Dave Ramsey, who are housing market bulls and have huge interests in keeping housing prices going and keeping home sales thriving because their business relies on it, are not going to come out and say that the housing market's going to crash because they don't want to instill fear in people, and they would rather have you just go in and bet the farm on the next big purchase and they get their commission. After that, they don't care what happens to you, guys. They're not going to come in and help you pay your mortgage once you lose your job and you can't afford to pay anymore. But you best believe that people like Dave Ramsey and Jason will be more than happy to come in and list your property as a short sale or a foreclosure once it becomes condemned. You can bet that they'll be happy to come in and relist that property for you once you can no longer pay for it, because now they're going to get another commission. You see how all this goes? And the other huge glaring thing that Jason is just flat out not acknowledging here is the fact that there are a ton of companies doing layoffs right now, and it has just begun, okay? When you combine that with inflation still being high, layoffs, as well as interest rates going to be rising into the first half of 2023, in what world does that make a strong housing market? It doesn't. There's no way to keep home prices elevated and to keep this party going forever under those conditions. It's just not happening, guys, and we can already see that happening right now in real time. And you know, on Jason's point when it comes to you can't time the market, well, actually you can, because earlier this year was a much worse time to buy than right now, and similarly how in a year from now is probably going to be a much better time to buy than right now. So there is a better time to buy versus a not so good time to buy. But people don't want to look at that. They want to believe these sayings that they hear a bunch of these guys say, and that helps them sleep at night thinking that, oh, I made the right decision when I bought this house, even though now it's already 30 grand underwater. And in my own personal experience, since I started as a real estate agent literally at the beginning of the previous housing crash, I got my license in 2009, guys. Home prices were already falling completely off a cliff back then. The biggest mistake that I saw buyers make during this time was that a lot of people were so bearish on the housing market that they kept saying, oh no, this isn't the bottom, prices are going to keep going down even further. And that ended up not being true for a lot of different properties in this area anyways. And what happened was people lost out on some really good deals because they thought it was just going to continue to go lower. Because a lot of people have been asking me in the comments like, hey Michael, I'm waiting for you to tell me when is going to be a good time to buy. But it's going to change for everyone, guys, because first of all, I don't know where you live and what exactly is happening in your local neighborhood, and that's up to you to research and make sure that you are paying attention to the home price data in your neighborhood. However, if you start to see home prices dip below where they were a year ago or even further below than that, then I would say that it's okay to buy that at that point. But that's if you're even in the position to buy at that point. And that's why I keep telling you guys to save your money. Have a good credit score. Have everything lined up and ready to go. Have your ducks in a row ready for this housing crash, and you're going to be able to take advantage of the opportunities that are coming. Because ultimately, the one big thing I do agree with Jason on that he says at the end of this article is that in the long run, real estate is the best investment that you can make. And I agree with him. I also am a real estate investor. I agree with buying real estate just as much as I agree with buying gold and silver, but I don't agree with a lot of the points that I pushed back against in this video. But the way I see it is if you start seeing home prices drop 20% or more where they were a year ago, then I think it's safe to buy. Even if it continues to drop further than that, then at least you know that the recovery is well on its way. Now, that's taking a chance because maybe you live in a market where it goes down by 40 or 50%. Like places like Phoenix are looking like that's a real possibility right now. And if home prices are down 20%, it's probably not a good idea to buy in an area like that with the potential for a lot bigger drops coming into the next couple years. If you're watching your market and say the home prices have only fallen 5% and are remaining pretty flat, then that's a pretty strong indicator that your market might not see huge price drops into this housing crash, and you're going to have to then determine when you're comfortable with buying, when the right deal comes along, the right property in the right location like we talked about earlier in this video, as well as can you afford it and are you going to hang on to it for the long term. So those are really the most important things that are going to be buying signals for you. If you guys enjoyed this video, make sure you click the bell notification down below. YouTube will alert you every time I post a new video. And if you don't want to wait, check out my next one on the screen right over here, and I'll see you in the next one.